Well, guys, thanks for joining today. As we said in the invite, we're going to go over the budget. I'll kick it over to Steve in just a second, but I just wanted to say, the 21st Century Alliance was founded with a mission to fix our broken politics, and we're hoping to do that by creating a new results-oriented political culture, doing that by electing great candidates, working with incredible legislators to get things done, right? Accomplish real results here. One of the things that we're really proud of right now is progress we've made on the rainy day fund. There's an early math screening bill that we're working on as well. So there's a lot in the pipeline, but I always like to remind everyone of kind of our future vision and what we're working toward long term. But with that said, I'll turn it over to our founder and chair, Steve Wesley, who will kick things off for us.
You bet. I'll be brief. First, I could not be more happy to see community leaders from literally every corner in the state. I think the fact is people really do care about better governance, and groups like the 21CA, I think, can do an essential job to help push things in the right direction, make legislators aware of the key issues before us, and bring appropriate power to bear to move things the right way for the state's betterment, not for the betterment of any single interest. I just want to note, having been the former chief financial officer in the state, when I was in that role, the state budget was a little over 100 billion. We're virtually 5x that now. And some would argue during that period of time, as David Crane has artfully pointed out, quality of services has diminished, not increased. We're going to untie for some of that today. That's why we're way out in front on the rainy day fund. But there are new challenges all the time. Not only has the budget gone up, but some of you are aware we're likely to have some of the largest cash inflows in the state or any state's history because of IPOs with SpaceX and upcoming ones with OpenAI and Anthropic and countless others. There's going to be a huge temptation to spend every penny of that, which could leave us in probably the most exposed we've ever been. Or we can be prudent, save some of it for the future, pay down other debts, whether it's in pensions or other areas. We hope it'll be the latter. What we wanted to do is bring someone who literally had full conversancy of every aspect of the budget and bring community leaders like all of you together, give you a chance to ask any and all questions you can. Gabe has kindly offered to do a quick sort of 10-minute-ish overview. Without further ado, I would just like to say I've done panels and other work with Gabe. He is absolutely the voice of truth on the budget, and we just need more people like him in public service. But Gabe, take it away. Give us the overview. We've got a lot of
Yeah,
smart people here eager to ask
yeah.
some questions.
Thanks so much, Steve. Really nice of you to introduce me that way, and it's always good to be with the 21st Century Alliance. The A lot of what you said, Steve, is a really good summary of the situation as we see it as well. So, I'll just level set here a little bit as to where we are. In mid-May, the governor released his May revision to the January proposal, and that's kind of puts us into the final sprint to concluding the budget. And just this week, the legislature passed its agreement with itself. The two houses came to an agreement on their legislative package, which reflects their priorities. And then now it would be that in the next week or week and a half or so, the legislature and the governor would have to come to agreement. And basically, in broad brushstrokes, the legislative package softens and delays implementation of some of the budget solutions that the governor included in the May revision. That's kind of the gist of it. And so, uh, we'll see how the negotiations between the executive and legislative go here, but that's sort of the big picture. Our analysis that we have done is more of the May revision because the legislative package just came together. It's not quite as something we have quite as much insight into some of the decisions that were made in the last minute, really. So I'll describe the May revision and our take on that because it kind of still serves as the basic architecture to, I think, how they're approaching things. And so it's very useful. And of course, the governors of any one individual, the most important in the budget negotiating process. So I think his priorities will still be quite reflected in the final package, I'm sure. So basically, why don't I just have a couple slides I'll go through here and then happy to talk with you about questions you may have. I have a few slides. So basically the general fund package under the May revision has 246.6 billion in spending that is proposed through the budget window, which we talk about as including 2024, 25, 25, 26, the current year, and 26, 27, the coming budget year. Uh, Across that window, the May revision reflects an upgrade to revenue estimates of $16 billion. That is definitely tied to what's going on in the stock market, as Steve mentioned. And just to put some additional context there, that means that since last June, since we adopted the budget last June, the estimated revenues available for the upcoming budget period are $60 billion higher than they were last June. And then despite that, though, the May revision continues to maintain some of the previously planned draws on the state's budget stabilization account and suspension of deposits to the rainy day fund that would be required because of these strong revenue upgrades that we're seeing, and also increases a proposal to to maintains a proposal, I should say, to borrow essentially some money from the Proposition 98 side of the budget to fund the regular side of the other side of the budget. And so um, those are things that are happening under the context of this very strong revenue growth, which to me, in our office is something, that we think they have to be quite careful about. The budget proposal includes 14 billion of budget solutions. And again, if we're adopting various types of solutions, when we say solutions, it's ways to spend less in the current year or the budget year or generate additional revenue in that year because there's an underlying deficit. There's a structural deficit between our revenues and expenditures. And part of our overarching message to the policymakers is just that we think it's, noteworthy and concerning to have it be talking about having to adopt solutions when we're in the midst of revenue growth like we've seen, like the kind that I mentioned. So this package, the May revision includes 14 billion according to our tally of proposed solutions. They include some about 2 billion of tax increases, which would be in the form of limitations on corporations to use tax credits and an expansion of the a broadening, I guess, of this of our sales tax to include pre-written software packages, and then a new managed care organization tax, a new type of provider tax imposed on healthcare providers. Then there's about 3 billion of spending solutions. About 780 million of those are are actually reductions. Those are actual cuts to spending, and it's mostly in the form of imposing an asset test of $2,000 on Medi-Cal. So if you have more than $2,000 in assets, people would not be eligible under the governor's proposal. And then he's got about 2 billion of what we'd call fund shifts, using some other revenues and other that were intended for other purposes initially or as designed, and using them to sustain general fund spending. Then, compared to prior proposals and prior budgets, the governor uses about 5 billion more in our budget reserve. This is in the form of suspending what we would have to make as a true up deposit because of the revenue strength. So because the revenue estimates have been upgraded, the formulas would call for us to make a $7 billion true up deposit this year. We previously adopted a budget that suspended 2 billion of that and now he's proposing another 5 billion of suspension in those deposits. And then the 4 billion in borrowing, like I said, from Prop 98. So this is where the Prop 98 formulas tell us we owe the schools a certain amount. He's going to provide almost 4 billion less in that. And then if revenues meet or exceed the budget estimates, we would owe that money to the schools, and it would have to come out of the non-98 side of the budget. So you really have to think of this as a way of borrowing from the non-98 side of the budget uh, to cover that cost later. So again, it creates more pressure on the general fund in the future unless revenues unexpectedly go down between now and the end of this current fiscal year. Now, in terms of the um, oops, I'll just quickly say there's a very limited amount of new discretionary spending, only about $1 billion in the May revision. It includes the largest one is 76 million for maintenance and upgrades to Exposition Park down in LA in advance of the Olympics. And then there's a smattering of smaller items, but the total is only about $1 billion, so there's smaller amount there. Um, it is important. I want to give credit where it's due that the May revision would, if it were adopted as proposed, over time, it would shrink the state structural deficit. So it does make progress shrinking that structural deficit, whereas Department of Finance had estimated we had an annual structural deficit of about $20 billion per year. Under the May revision, that would come down to about 10 billion per year in the out years. And it has to do with that I can tell you if you're interested some of the ways they do that, but it has to do partly with the revenue enhancements that I mentioned, the revenue increases, but also some curtailment of Medi-Cal in particular, and changes in our in-home supportive service program and different things, some social service limitations, essentially. But as I was kind of saying, the the existence of a structural deficit at all in the midst of a revenue boom is a real warning sign, we think. And just to make no mistake, we are in a revenue boom. I don't have to know this is not news to this audience, but I mean, the stock market is up 75% in the past 3 years. State tax revenues are up over 30% in that period. Uh, and yet, despite that, the state is really not well poised for a downturn in revenues, which we can't predict when that could happen or would happen. And we're not predicting that it will happen, but it's just that we should be using this time to further add to our reserves and build up our budget resilience. And instead, we're actually using that resilience in this boom. So that's kind of our underlying or overarching message to the policymakers. Again, this is really not, news to you all, but we've noted that the stock market, if you just look at some of the ways of measuring it, has really gotten quite high. The price level is quite elevated. We've seen, the CAPE ratio, cyclically adjusted price to earnings, are really at levels now that the expected return going forward is only been as low as it is now back at the dot-com boom and the other warning sign we're tracking is just the degree to which investors are buying stocks on leverage, margin debt. That's really at 3 times the normal average. And so we think there's just a lot of enthusiasm built into market prices. And we're not disputing that AI is a transformational type of technology, but as we've seen in the past, whether it's with the railroads or the radio or the dot-com period, even though the underlying technology has long-term benefits for our economy and society, it's certainly possible that we can get ahead of our skis in terms of overvaluing some of these stocks, and we could experience a downturn at some point. And when that happens, the what tends to happen is it's not a gradual thing. There's usually quite a sudden reversal, and we've seen periods when that's happened in the past. If we look at 2022, the stock market was down by about 20% for several months, and it ended the year down 20%. Well, state tax revenues came in 65 billion below what the finance estimates were for that year. And if we were to compare the current situation more to the dot-com period, our estimates are that the state could easily experience a $100 billion revenue shortfall if we had the kind of market downturn that we saw in those, at that point. And so, what our message really isn't to say we should assume that's happening or we're predicting when it would happen. I'm well aware that when Alan Greenspan described the market as experiencing irrational exuberance in 1996, the stock market went on to double before we experienced the crash. So we can't say when this would happen, but it seems like we could experience it at some point. And in any event, we should be using this period to increase the state's budget resilience as sort of our message to them. So with that being said, we had three main recommendations. The first was that we commend the governor's proposal for putting forward ways to shrink that structural deficit. If the legislature didn't want to adopt the same policy changes, we think it should still maintain that amount of structural deficit reduction. That's a big step in the right direction. Um, you know, the budget currently, I referred to us using 5 billion of the reserve this year by suspending the true up deposit, but actually since 2025 and then 2025-26, we are now approaching using about $20 billion of our reserves since 2024-25. The reason that I speak back to that year is that still some of our revenues and some of our expenditures accrue back to 2024-25 and then 25-26, which is the current year, and then the budget year. So in the capital community and the governor's budget proposals, you'll always see them refer to the budget window. And it is those three fiscal years that are still live, if you will, for lack of a better way of saying it. And so, in that budget window that we're in right now, we've used $20 billion of our reserves. And so, we recommended actually that instead of doing some of what the governor proposed, we said that we should actually find additional solutions in the budget and replace, given the revenue boom, we should replace that $20 billion that we haven't deposited or that we actually took out. So, I mean, I'm not really anticipating that they'll take us up on that one exactly, but I'm not naive. But I think it's important for us as an office to kind of highlight that this has been done, and from a fiscal best practices standpoint, this is probably what we should be thinking about. And then regarding this settle up of 4 billion that we're borrowing from basically the Prop 98 side of the budget, they would justify that by saying, well, we're proposing to underfund Prop 98 because if revenues do come in below what we are estimating, then this obligation would just go away. We wouldn't owe it. And that's true, but this settle up is being created for 2025-26 for the current year that we're in. So I'm here we're in June 18th here. I'm not expecting us to have the revenues be that much lower between now and the end of the fiscal year than what they were assuming, certainly. So if anything, could be higher. And so it's not really, I'm not sure I completely agree or accept that justification for it. To me, it looks more like we're just borrowing from that side of the budget to fund our programs. And if you wanted to preserve protect the Prop 98 side of the budget in the way that they're saying, then we think the 4 billion should just be put into the school reserve. There's a Prop 98 reserve, and they can put a deposit in there discretionarily and then take it out if the revenues are high enough. And then it wouldn't create an obligation. It would on the non-98 side of the budget. But of course, the hard thing about that is you would have to find $4 billion of additional solutions on the non-98 side of the budget now that we're currently funding with this borrowing. So that is my presentation, and I'll be happy to try to do my best to answer some questions you may have.
Well, great, Gabe. Thank you. Uh, really appreciate that presentation. I know I saw Evelyn's hand go up, so Evelyn, I want to go to you in just a minute, and then Pete Weber. Before I do, I just want to underscore for folks, getting engaged on the budget in California is a lifelong journey. There were some inside baseball references that I think Gabe mentioned. If you have a threshold question, if there was something you didn't understand, please know that chances are there are multiple people on this call that also maybe aren't read in, may not know all the details of Prop 98 and the non-98 context. Totally good. If you have questions around those, please feel free to ask them, and we'll do our best to maybe dig
Oh
down a
yeah,
little bit
yeah,
on
good.
those things.
My
So
apologies. Yes.
Gabe works within the legislature for the majority of his time, and so those folks they know all the acronyms. But
Well, yeah, it's good. It's a good point.
so I want to flag that for everyone. With that, we'll go to Evelyn, and then Pete, you're on deck. Evelyn, please.
Thank you, Brian, and thank you, Gabe. I apologize for the background noise as I'm driving. Gabe, I really appreciated your perspective on the Prop 98. I was actually going to ask you that, like, what is the governor's justification for the $4 billion cut to education? Because I was just with the superintendent yesterday, and I mean, they're talking about consolidating schools, which basically means closing down schools, right? And combining them. And I, through my nonprofit, serve the families who will be affected, and that's going to cause a lot of strain and stress on families who are already affected by the ICE raids. So that's one. And then the other question I wanted to ask you is, I thought I heard you say that there are going to be changes to Medi-Cal. It seems like there's going to be new requirements, plus I imagine cuts as well, also cuts to CalFresh, food, healthcare, top priorities, education,
Hmm.
top priorities. I thought I heard you say if people have assets above $2,000, does that mean that if they own a vehicle, does that mean that if they own, which is critical in California, in LA specifically, or if they own a home,
Hmm.
they can't qualify for Medi-Cal? Is that what I'm understanding from you? Thank you, and thank you so much, Gabe.
Yeah, it's basically correct. And the legislative package that they put through this week delayed the implementation of the asset test and actually increased it to 21,000. And so I one of the things I was saying at the beginning is that the legislative package basically delays and softens some of the budget solutions. I understand, when I say it that way, but from just a mathematical standpoint, they represent solutions to the deficit. And so we'll see where that comes out at the end. But some of the governor's other proposals included extending work requirements. HR 1, the federal bill, included the introduction of community engagement requirements that's commonly referred to as work requirements for people in Medicaid. And in California, the governor proposed extending that to individuals with unsatisfactory immigration status. Those are currently people on Medi-Cal, but they're funded entirely from state funds because they're not eligible to receive federal matching funds. So there would not be a requirement for the state of California to also impose a work requirement on that population, but the governor is proposing that in addition to citizens on Medi-Cal being subject to the work requirement under the federal bill, also these individuals would be as well. And that's in the budget May revision, that would represent 2.1 billion of the savings over time. So there's some changes like that, are, that certainly members in the legislature are uh, not enthusiastic about, I'll say, and that's why they delayed. For now, they delayed the implementation of some of these types of changes, and so again, though, we don't know what the final package will be after they negotiate between the two branches.
Great. Gabe, thank you. Evelyn, thank you for the question.
And on education, I'm sorry, I was also asking about education. The
The
$4
borrow,
billion.
well, yeah, I mean, it is basically what I said, that for Prop 98, there's every year there's a constitutional formula called Proposition 98 that generally means we're required to fund the schools. 40% of general fund revenues must go to schools and community colleges. The governor is proposing to underfund that by 4 billion in the May revision, and then would fund that, though, if revenues come in at or above what the revenue estimates are. So from his vantage point, he would not describe that as a cut. He would say uh, it's a contingency, because if revenues come in above the number or below the number, if they come in below the estimate, and we already gave the 4 billion, in that sense, he would say, well, we're overfunding the schools and we can't go back and claw it back from them after the fact. So in this way, he's saying we're creating some flexibility so that if we do come in above my revenue estimates, we'll fund it then. But like I said, basically the net effect of it is we're using the money we're not spending on schools right now to fund Medi-Cal and all the other programs. And then in the future, if those revenues do come in above the revenue estimate, as everyone's planning here, then the Medi-Cal program and all the other programs would owe 4 billion to the schools. So it's, that's, I don't know, not sure. That's the way that it works anyway.
Taking from Peter to pay Paul, basically.
I thought of saying that. I thought of saying that, actually. Yes.
Yeah, thank you, Gabe. Thank you. Appreciate it.
Evelyn, thank you. Peter.
Yeah, first thing, Steve, I want to make a recommendation that that the 21st Century Alliance institute a Truth Teller Award, Sacramento Truth Teller Award. And I want to nominate Gabe for being the truth teller in Sacramento.
We may take you up on that.
Gabe, you and I have talked about this a few times, but I want to stay out of the weeds. I just want to stay with the big picture. And
yeah,
I'm going to take the liberty of summarizing what I heard you say, which is that we are looking at a year in which California is collecting almost record tax revenues, second highest tax collection year in California's history. And despite that, as you've related, we are using essentially $20 billion in either deferred or avoided deposits into the RDF. We are actually drawing from the RDF in order to achieve what Governor Newsom is calling a balanced budget. And we've done $20 billion of that over the last few years. Additionally, we are incurring $4 billion in debt. I mean, that is insane, I think, given the structural deficits that we're looking at, and given the high likelihood that at some unpredictable point in time in the future, we're going to see a downturn in the stock market. So with all of that said, what I'm hearing about the legislative proposal makes things even worse, right? Because the $13 billion worth of solutions that were proposed in the May revise, actually, most of that goes away. And so the question is, frankly, at this point in time, I'm very skeptical that there's a sensible fix for what happens this year. So what my questions are really going to go to the future. Is there any possibility that we can still fix the future? And what are you hearing about the intention to propose a reform to the rainy day fund in this November election. It requires the voters to take action on that. You have, I think, proposed some excellent solutions, but what I'm hearing, the scuttlebutt I'm hearing, is that all they're doing on that is essentially window dressing. It is optics rather than a real solution to the problem. I mean, raising the cap from 10% to 20% accomplishes very little, particularly if they're going to ignore the requirements, to make deposits into the rainy fund as they have been doing historically. So, comment on the longer term solutions, if you will.
Yeah, and I'll just say at the outset, the administration took issue with the way I was describing the use of reserves because some of the decisions to use that 20 billion in reserves were made in the last two budgets. So they said that's unfair, or they took issue with me saying that we're relying on 20 billion in use of reserves when only about 7 billion is new proposed use of the reserve.
Yeah.
To which I said, I would say, when the situation changes, when we have since last June, we've upgraded our revenue estimates by $60 billion. I think we need to go back and revisit the use of those reserves. We should not be using the reserves when that's happening. And so I stand firm in thinking that we should, if we had a new deficit, we would have to make changes in that direction, right? If the revenues came in weaker, we would have to make adjustments to our budget that we already adopted. So I'm saying the revenues have come in much, much stronger than we anticipated, so we should make adjustments as well. To your other question or bigger question about what to do, I don't know very much about the reserve proposal. I've heard the 20% increase to the 20% cap. I understand that they may be exempting deposits to the reserve from the GAN limit, as I think you have advocated as well. And so that would be, I think that alone would be a material, notable change, actually, because it would include discretionary deposits. So if we had policy leaders that wanted to make extra deposits into the reserve, it would not count against our spending limit under the GAN limit. So that could be beneficial. But I take your larger point. We think the reserve should be larger, and we think there should be stronger requirements for making the deposits. But I don't know really what this is, and I have to be a little careful because we will have to write the ballot materials, I guess, if it is going to be put before the voters. So I have to retain a neutral stance on it. But in general, yeah, we think that a stronger reserve policy is what is called for in this situation because it does two things. It builds up the resilience for when there's a downturn, and it also takes, when we have these revenue surges, it takes some of that revenue off the table and puts it into the reserve so that it's not built into our spending baseline going forward. And so it protects us really in two ways. And as Steve was mentioning, just how much the general fund has grown since he was the state controller. Just since 2019-20, our general fund has increased by 75%. It's increased $100 billion. And so the current trajectory is just not sustainable. I mean, under any reasonable assumption around revenues, we have spending growth that we have commitments at the state level that our recurring or our sustainable revenue base just cannot afford. And so that's the fundamental question, I think, before policymakers and candidates for governor is, what do you envision for the size of the state government in California? Because the current one exceeds our ability to fund it on a reliable basis. And so I'd be very interested to know what they think about that.
If I can just follow up on that a little bit, I mean, the increase in the cap from 10 to 20%, your Monte Carlo simulations indicated that wouldn't have much of an effect really on. But let me just take it a step or two further. One is removing the GAN limit, limitations. That's a good thing to do as well. But it doesn't avoid us from continue or the legislature and the governor to continue to do what they've been doing, which is ignoring that whole thing because they use all kinds of excuses to not put money into the reserves. That's how we got to the $20 billion today. And so you had proposed a formula that would, create windfall revenues and shortfall
Yes.
revenue scenarios and so on and so forth. None of that, to the best of my knowledge, is being contemplated right now. And so we're really left with changes that look good on paper, but may not have much material effect on our fiscal, our structural deficit. Is that the way you say it?
I mean, I think you're making very good points, Peter. Yes, I think uh, our report that we wrote last year called for larger reserves and more simplified calculations for how much gets deposited with stronger teeth as to requiring it and requiring those deposits. And I just don't know. I agree. I don't my under I haven't heard that those are being included into what's being proposed, but I have not in all fairness, I haven't seen the draft or anything, so they haven't shared it with us at this point.
So I did see a question from Pete Manzo, and I want to go to Pete, but if I may, before I did want to ask Gabe if you could talk a little bit more about these IPOs that are coming up.
Yes.
Nothing since Facebook, I don't think, have we seen something like this. But the translation of funds to the state budget from these big IPOs is a little complicated, and it's stretched out over a period of time, as I understand it. Can you talk through for us, like how will these IPOs impact the state budget and over what period of time?
Yeah. Okay. So when it comes to SpaceX, there is we have not done a fiscal estimate on that, and there have been some folks asking us about that, and I'll tell you the reason for it, and it has to do with the way that this IPO was structured. But the bottom line is, you kind of allude to it, Brian, that the relative to past IPOs like Facebook, the tax revenues from the SpaceX IPO are likely to be less immediate, and they're probably also more unpredictable. And so the bottom line is that the revenues will depend more on the financial decisions made by employees and investors in the future who have held these pre-IPO SpaceX shares and stock options uh, as opposed to just the day of the IPO. And that's because they structured this IPO to have a single trigger, which is the taxable event is when the I'm sorry, when the restricted stock units that these employees are getting are vesting. And they, in many, many cases, already have vested. That there is not a double trigger like there was with Facebook, where there was also a taxable event upon the IPO. And so, those RSUs, as the employees have already been vesting, they've been vesting with the employees. The tax revenue has actually already been appearing in the withholding collections that we see coming into the state of California. And so, to some extent, we've already been benefiting from it. And then, in addition, SpaceX has enabled the employees to sell at different intervals. They've been able to sell pre-IPO shares to institutional investors, and we don't know where these institutional investors necessarily are domiciled. So if could be in New York or somewhere else, and so some of the upside from the IPO going forward to those folks would not necessarily accrue to the state of California. And that's really when I said it's more unpredictable in a way, that's what I mean about that. And, you know, one thing about the SpaceX IPO is they did have a fairly significant retail tranche, as I understand it. I feel a little bit like some of you are way more dialed into some of the market stuff than I am necessarily, but
Yeah,
as I understand it,
there's a
they've
hundred
got 20
billion.
to
There's a hundred.
25%. I'm sorry.
There's $100 billion retail tranche, largest one in history. So
Yeah, right, right. And so one of the things we are learning about that is that a lot of the people that buy those, they do become a little bit subject to a soft limit on their ability to sell. So if they turn around, if they buy the shares and into their Fidelity brokerage account and they want to sell them within 15 days, they'll incur, Fidelity will lock them out of future IPOs. And so all of this to say, we think right now we're kind of seeing there's a lot of institutional benefits to the demand side of the equation, and so it's hard to say what will happen in the future with it, but we a bottom line is we think there's upside. There will be additional revenue to the state, but it may not be quite as much of a spike or a surge as there was with Facebook because of these structural aspects of the IPO. And so and also our revenue modeling has changed since Facebook times. And what we do now is we do build in the experience of past IPOs into our revenue models. And so there were a lot of IPOs back in 2021. I want to say, Steve, that was a year when there were a higher number. And so our revenue model is kind of factoring in the uh, historical experience of those IPOs into the current model. So some of what our revenue estimates show already reflect, I think, to a certain degree, some of the upside. And so we were communicating this to some of our bosses in the legislature that be careful. We don't think you should assume there's this massive windfall coming in, the next 2 months or something. So but that's our thinking on it, and because of these vagaries and this uncertainty and the way that it's tied to investor behavior in the future, we weren't comfortable doing like a precise fiscal estimate. We thought to be responsible about that, the range would have to be very wide, and then it got wide enough that it's almost unhelpful. So.
Great, Gabe, thank you. Hey, I wanted to tee up a question from the chat. Can you talk about what is driving that 75% increase in the general fund over, I think you said since 2020?
Yeah, no, that's a very good question. We did an analysis of that because we were looking at these numbers, and really said to the staff, I said, I don't feel like I have a great understanding of why it's going up like this. And the conventional wisdom, even within our office, was, well, I'm sure it has to do with the fact that we've expanded Medi-Cal to include people, undocumented residents of California, which we didn't do before, and certain policy or programmatic expansions like that. And certainly that added to it, but about 80% of the 75% growth in the general fund was to maintain or sustain existing program commitments that were in place at the time of the 2019-20 budget. And so really, it comes down to some very difficult uh, features of our social safety net, and it's mostly there's three programs that is driving this growth. It's Medi-Cal, in-home supportive services, the IHSS program, and DDS, Department of Developmental Services. And I think there's a couple of broad explanations. In-home supportive services is generally for, people that are in need of assistance, but we allow them to stay in their home by paying caregivers. To family members are often the ones that take care of them, but to do that, they're eligible to be compensated. But we have an aging population, and so we're really seeing the effects of that in our IHSS program. And Department of Developmental Services, it's a very expansive safety net program that covers people with developmental disabilities, and the eligible or population that is eligible, that the diagnoses of these conditions has really grown in the last 10, 15, 20 years. You just think about our diagnoses of people with autism conditions, and these type of things have really, really grown. And it's, I think, it's really putting pressure on the budget. It's not a means tested program. It's subject to the Lanterman Act. So it's a state entitlement. Once people are eligible, they're eligible for life, because these are not conditions that people, um, grow out of. And so, it's really, that's the driving factor there. And then Medi-Cal, I think we all are aware of just how the healthcare sector is subject to much higher inflation than the rest of the economy oftentimes, and it reflects the, cost disease element of it, where these are human services that are being provided. So we don't really see over time the benefits of labor productivity enhancements the way we do in, the private sector in many cases. And so all of it put together, we're just seeing really explosive growth in those programs. And it's, it doesn't seem to me that it will be sustainable, but hopefully that gives some idea.
Great, Gabe. Thank you. Other questions?
Gabe, I had one question. There's been a lot of discussion about are is California's high-end top bracket tax rate, 14.2 or 3%, driving people out of the state? And there's just an interesting article on Elon Musk and his fortunes, and how he would probably be due something in the range of $42 billion in federal tax this year, and that he'd likely, at a 13 or 14% rate, if he'd still been in California, would have been paying roughly a third of that, about 8 or rather 10 or 12 or 14 billion to the state, which we won't get because he's living in Texas.
Mm-hmm.
And I was joking with someone, that's the rare case where you only need an N of 1 to know you have a big problem. And I guess the question is, do you have any numbers that suggest that the egress of extremely high net worth individuals is increasing, decreasing, staying the same? What is your thought on that?
Well, yeah,
Especially with the booms with Anthropic and OpenAI, I would think there's going to be some new data, and you might want to keep a particularly close eye on it.
yeah, we're definitely doing our best to track this one. I know we've talked about this before, where we do like to look at the IRS data to see where, not just that they're not in California, but where did they go? And we did see through, this is where it gets a little frustrating because the IRS data is so lagged. Our most recent year is 2023. And what we saw then was, compared to the immediate aftermath of COVID, there was actually a downtick in outmigration, even among the higher income people, but it was still higher than it had been before COVID. So it peaked. That peaked in 2021 is when our outmigration peaked, and then it edged down a little bit in 22 and 23, but it's still higher than it was before. And then when we did our analysis of the billionaires tax, I'm not commenting on the merits of that, just for the record, but what we did find is that it would generate tens of billions of dollars in temporary revenue from the levying of the tax. But on the other side of the coin, it would result in hundreds of millions of dollars of lost revenue on an ongoing or permanent basis, presumably from the behavioral response that you're referring to, where people leave the state. And so these are, that's not overly precise, but it is what we're putting in, or what we had put in our initial estimate of the billionaires tax. So we acknowledge that effect that you're talking about. And, we had meetings with proponents and opponents of the measure, and we did we were able to hear their perspective on that, and I felt like it was generally consistent with what you were saying and what I'm referring to here. But I don't know if there's something more to that I could offer, but
Gabe, let me
No.
jump in on a topic that you referenced before about the growth of the budget. Now, obviously, sort of expanding the pool of folks who are eligible for Medi-Cal is a policy choice. But when you're talking about autism diagnoses or an aging population that require in-home supportive services, like those are things where California, I mean, certainly in terms of an aging population, I think we may be better off than some other states. But what that suggests to me is that this is something that other states are probably grappling with too. I don't know to what extent you've looked at other states for comparisons, but my suspicion is that our spending is increasing at a higher rate. Is that so? And we talked about the Medi-Cal and the policy choices, but to what extent are we an outlier in terms of that rate of spending increase, and to what extent are we maybe sort of on a continuum with respect to other states?
I suspect I suspect that is the case. I go to the annual meeting of Western Fiscal Officers Association group where it's all the people west of the Mississippi from similar positions that I'm in, and everybody last fall was talking about how they were experiencing the similar pressures on their expenditures. I think our suite of social services, our safety net programs are probably more expansive than some of the other states. I suspect that. It's a good question. I don't think I haven't done a rigorous comparison of with our state and others on these points, but it's a good point. But my instinct says that we probably are a little bit more on that side of things, and so uh, it adds to the pressure that I was referring to.
Yeah, great. Thank you. All right, I think we have time for one more question. Anyone want to jump in?
Great.
Fantastic. Well, delighted you all took the time to join us today. We certainly are grateful, Gabe, to you, certainly for being with us, but more than that, for the role that you play within the legislature. When so many people have agendas and access to grind and what have you, we need someone who's just presenting numbers and data so that people can make sound decisions. So thank you for sharing that with us. Thank you for being a resource for our legislators. And thanks again to all of you for being here. We are going to continue to be engaged on this issue, particularly around the rainy day fund, to make sure that whatever happens, whatever policies come out of the legislature are the strongest possible for the long-term best interest of our state. So we'll certainly be in touch with all of you on that front. Thank you very much. Giving you 5 minutes of your life back. I hope that's good.